In the meantime, analyst Mark Mahaney is with us now as an outperform on the stock. 155 bucks is the target. Mark, it's good to see you. What are your own expectations? And maybe they're higher now street-wide because of this ramp up into the number.
Well, the expectations are higher. I'm not sure they should be. I think we had some very specific to Meta developments last night, to Facebook last night, that I don't think you can really extrapolate. I mean, Meta had nice revenue growth acceleration. Google didn't print that. And across cloud computing, the enterprise category, okay, it didn't decelerate dramatically, but it decelerated for Azure. It decelerated for Google Cloud. And my fear would be, I'm a bull on Amazon, but my fear is that at Amazon and AWS, because they've got greater exposure to SMBs, greater exposure to the startup community, that they could see sort of worse trends, at least near term, than the other cloud vendors. So I want to be a little cautious on Amazon going into the print. I like it, and if you're a long-term investor, I think this is a trough margin, trough earnings year. But I think things will still get a little worse before they get better.
Wow, outperform, but certainly not overly excited. AWS revenue growth expected around 15%, Mark, as you point out. That would be the slowest year-over-year pace since 2015, and that's when the company started breaking it out. The question is, how much lower are we going to go?
I think that's actually the number one issue on the stock. I think there's two issues here. That's one, and then we're going to get this recovery in the retail business because almost all the cost inputs into the retail business have dramatically improved from that last year, which was horrible in terms of all the cost shocks they had. And then, I'm sorry, the third thing is this company going to be more aggressive in terms of cutting costs? I don't think they will. Google wasn't. I don't think Amazon will be. And so then we're back to issue number one, AWS. I think AWS growth is growing lower. I think it's going to be sub that 15%. And the real debate on the stock is how low will it go in the June quarter? And are we doing high single-digit percentage growth? Because they'll probably give a little bit of color commentary. I think the market's braced for that, so I'm not sure it's a negative surprise. I'm just not sure why it's a positive surprise if, Amazon prints, AWS, sort of people think about it being a high single-digit percentage grower. That growth rate will reaccelerate, but all of the trends, I think, unfortunately for AWS are negative now, and I don't think they turn until the second half of this year.
Wow, no more cost cutting. You really think the street is prepared for that? I mean, I've heard people criticize Alphabet for not being more aggressive in the way that Meta and some of the others have. You really think the street's prepared for no more?
I'm not sure it is. That's why I want to be near-term cautious on the stock. I think Meta again. I know we're trading up on Meta, but Meta's a sui generis case, or so kind of a one-off here. This is a management team that clearly we're cutting costs, and we need to bring down expenses. They got that memo. They've had it for the last 6 to 9 months, and they've embraced it aggressively. I don't think Google has, and I don't think Amazon has. I think Amazon probably needs to do more. So, if the market really wants, much greater cost efficiency, I think Amazon, like Google, they plan to grow into it. They're very long-term focused companies. It's been a great, wonderful success story for them and a good recipe for them for a long time. But if you're looking for near-term cost cuts, those aren't the companies to give it to you.